Monday, November 6th, market analysis, Stan Ehrlich. You guys know I start out with the stock market indexes and go into maybe some cyclical analysis, and then definitely futures is actually second group, and some other stuff occasionally. Let's start out with the indexes. Here we go. We are actually just now, a few minutes ago, a little bit lower on the day. The E-mini is dropped off to a slight bit lower at the moment. Everything is dropping off. We came relatively close to being overbought, not officially in my interpretation. And the RSI is a custom version of Wells's relative strength index. So the downside on this is some gap closures, but there's no gap on the E-mini. It's not closed for very long, except on the weekends. So they fairly rarely gaps up or down. But the spider, my next chart, did have a total of 3 gaps last week. That's a lot in 1 week. This one down here at around 418.5 is very small, and I really doubt that it's going to get closed, but there is a slim chance. Now, the gap that we have, it will be closed at 423.60-ish. That one is not out of the question at all. Remember, we got very close to being overbought. The last time we were up there, we had a very big downside swing for a few weeks. The time before that, the same thing happened. The time before that, we were actually overbought. And of course, I got an ER sell signal smack dab at the top of the market. That's why I built the strategy, automated strategy ER signals. And we got a buy signal almost exactly on the bottom of that break. Now, I think we're starting to come back down and close the first gap, the highest gap at 431.12, let's say. And that may only take a couple of days this week. But we could, again, get down to 423. In either situation, I totally expect the market to turn around very soon. Maybe it's going to take 2 weeks. Maybe it's only going to take a little bit less and make new highs for the move. The next time we come up here and break above on a closing basis 436.5, we will probably plow through this previous important high at 438.33. And that's going to start the next major wave up to maybe new highs for the whole bull market. And that's exactly what I'm expecting coming into Christmas, to be honest. And then we're going to have the Santa Claus rally, and I'll get to the details to the minute and dates for when to get into the Santa Claus rally and examples of many of the last years. Been a darn good track record. Next chart. We got the E-mini Christmas contract. We talked about it a moment ago. And next one is a spider. This happens to be the 1 minute chart. You can see that we're starting to dribble off here and make minor new lows for the day. Not particularly seriously, and not particularly all that aggressively so far. Nevertheless, we spent a lot of time now the last couple of days in the same price range. And if we start to come down to close the gap, the beginning of the gap closure is going to be at a 432.90-ish, and it'll be closed around 430.95, call it 431. Yeah, 431. Then there's gaps below that as well. Okay, next chart, QQQ. It did get higher than yesterday's high, but we don't have an overbought situation, so I'm not going to get a bearish red sell signal if we get below Friday's lows, which frankly I think is a stretch. But I do think this week we're going to close that highest gap. It's the equivalent one on the spider. There's a much bigger one. The size is not necessarily that important. Looks like it could be, but I'm not so sure that's true. Anyway, I do think there's a very good chance 357.75-ish could be reached in the next week or two, and then up and away. Not this one. I don't think we're going to go down to 351-ish to close that gap. Next chart, NASDAQ. Futures contract doesn't close very often. So we made a little bit of a higher high, smack dab against the bear trend line. So that's a reason for this one to turn down. And it's exactly what I've been talking about. Next chart, DIA, right up against, like Friday, a little bit of previous resistance. And I'll rescale this just a second and show you that, there's been a lot of problems around this price level going back a year. So not surprised. We have two gaps to close here, and the lowest of the two looks reasonable. But I think that's the farthest down we might get to. And the one that only was created late last week looks pretty likely and very soon. Next, the Russell 2000 has bounced off of that incredible 3-year support area. You got to go back 3 full years in order to get prices equivalent to the lows of last week. And the lows of last week actually did make a new low for 3 years. I think it's for only like 1 day, maybe 2. Oversold conditions, zoom right back up. 2 gaps to close, and guess what? Part of the highest gap is being closed now. So it could still be today when it gets down to about 170. The gap that's going to be closed if we get down to 165 3/4, again, I think it's going to take a few days, and it's a little iffy that one's going to get closed, but I think it's a good chance. I'm going to give it 50-50. So let's go look at the October low chart that I've been showing you off and on. And before the October lows occurred on October 27th, I was showing it to you almost every day for weeks, if not a couple of months before it happened. So here is the history, most recent history. September 29th, 2015 was just before October. Then we have October 3rd. Then we have October 25, 29, 3rd, 30th, 4th, 13th last year, and this year, October 27th. That's a hell of a track record. And now I can add one more. Of the last 31 years of Octobers, only 3 have missed. That's a little bit better than 90% track record going back 31 years. More detail. This head and shoulder top in the SPY, I didn't really think was going to work very well because it came back up above the neckline for 6 days. And that is just a no-no. You can come up and touch it. You can come up and squeak a little bit above it, but you're not supposed to close above it. And it did once, twice, 3 times at least, and spent part of every day for 6 days in a row above it. No. That's not supposed to happen. So I abandoned my downside objective, which was 406 to 407.5. The darn thing got down here on October 27th to 409.21. So I came fairly close to my downside objective price-wise, and just in the nick of time in my little circle here, oval, into the price range and time frame that's October beginning end that I was looking for. Plus it got oversold. So here we are. We're now back to slightly lower on the day. Excuse me. Nothing crashing. We got those 3 gaps to talk about. And in the next couple of weeks, we'll be talking about them, that's for sure. Let's go to futures. Okay. Another point of view from the E-mini. Different lines, chart formations, same downside objective, almost exactly fulfilled, and got oversold and turned around. Very broad area support. It did dip a little bit below it, but it was oversold and saved itself and zoom right back up. So let's go look at the NASDAQ December futures contract, or continuation contract, I meant. Oversold conditions turned it back up again. We bumped against the major bear trend line I mentioned before, and we'll probably have a little bit of a retracement. Next chart. This is the bond futures. I have added today, the first time, a target time frame and price range. Why a little circle down here at around 109.25 or so, and why is it Thursday of this week, November 9th, the middle of the circle, left to right, date-wise, time-wise. It's because, I'm sorry, I got to bring up the topic again. It could be a head and shoulder bottom. If we drop down around or into my little green circle here in the next few days this week, I might stretch it to Friday, but this is supposed to be closer to, I'm sorry, yeah, Thursday would be the middle of it. So yeah, Friday is good. Looks like Monday, Tuesday, Wednesday of next week is the farthest out. So the price range is a little bit more specific. 109, I'll say 109.10, 109 and a third. And if we get real close to that around the end of this week, I'm going to be pretty happy and watching for a turn back up again. And I'll scream bloody murder, last shoulder on a head and shoulder bottom, minimum upside objective. And we did get the bottom of this market with an ER buy signal, the green bar, you know, every time you see red at the top, and that is automated. I didn't do that on purpose. Well, I wrote the code, or I didn't write it, but developed it. And a buy signal here that was nice for a few days, okay for a couple of days, not great. A sell signal almost on the top right there, and a sell signal and almost on the high right there. So this one was just perfect so far. But we got overbought on the rally. Okay, neckline slants upward slightly. Let's see what happens with this head and shoulder bottom idea. Premature, but that's how I, try to catch things before they happen. 10-year notes, same story. Didn't put in the little circle here. It would be right around, centered around the crosshairs right there. Next chart. Crude oil, hanging in there, supports doing its job. I don't think it's going to hold. I'm not that oversold at all. I do think it's going to get broken and come down into this next support area down in here. And I take a couple of weeks to do it. So next chart, natural gas. We had a great trade out. Now it's dropping off even more, but we gapped down today. Remember, gaps are like a black hole in space. They tend to suck the price action back into it sooner or later, usually sooner. So I'm expecting support to hold a little bit lower in the green zone here. And then for this market to go turning around and rallying back up to about 3.455, give or take a little, to close the gap soon. Take a week or so. Next, heating oil. Possible head and shoulder top. I've been talking about bearish engulfing on Friday. Looks to me like it should start to work its way lower. At the moment, we're a little bit higher on the day. Keep a very close eye on heating oil for this pattern to evolve. I can't go sideways much, and I sure as heck can't go up much because the shoulders appear to be in place. Last shoulder high, the last, was Friday. The one before that was on October 16th. The top of the market's obvious, the top of the market. And then your other two shoulders on the left-hand side. They are at approximately the right price levels, both of them, both sets. And the timing is approximately correct also. So this is looking fairly decent. And the little doji we have right now is not going to change anything so far. Next, gold. Almost a new low close since our new sell signal last week. You had two opportunities to get short at my little red dots, and that was at 2001.8. And now it's almost a new low and a new low close. I think it'll happen today or tomorrow. On our way down, in my opinion. Next. Oh, how far down? There's a gap to close at 1850. End of story. Next. Silver. Bear sell signal during this topping out, maybe topping out time frame. It's a little sloppy in here. I got to get back down to support and break below support. That'll make me very happy. Next thing you're going to see is 20.7. But we hasn't happened yet. I want my downside breakout to be a little more confident about what I just said. Otherwise, I would be a little skeptical about shorts and have a relatively tight buy stop above the market. We did catch that top. We did catch that bottom. We caught that high to the exact highest high. We caught that low to the lowest low. Well, can I keep going? Yes, I can. We caught the two highs on a double top formation and the huge low just before that as well. Precious metals have been great to us this year. Platinum. Almost got the low exactly. We got the high exactly. We almost got the low exactly. That's the green. And we did get the low exactly. And up we went. But we got overbought last week. So having a technical correction here is not a surprise. I think it could come back down as low as 901.5. Let's get there first and decide what happens next. So I'm a little bit bearish on platinum for the moment. On a longer term basis, it's a lot of sideways with a tinge to the south. Bearish. Next, high grade. Overbought today. Probably going to stop rallying in this broad area of resistance and pull back down a little bit, probably to 3.6, something like that, which is not very far away. So I've got to be careful here. This could wiggle around and not really mean too much and not give you any great signals like we got at the top of the market right there on August 1st and almost at the bottom of the market, March 20th. And we did get the bottom of the market exactly to the day on August 17th. Also the bottom of the market break on September 28th of last year. Next chart. Soybeans. We are scampering higher and doing very, very well with this new long buy signal at the bottom, October 12th, scream bloody murder at the time. Love it. There's nothing wrong with what's happening here. Trailing stop is coming up, now protecting a significant profit. And at any point, by the way, you can always get the heck out if you want. Nobody's going to stop you from that. And the idea behind automated trading systems is to learn to trust the signals and to ride the signals until the system takes you out of the trade. Otherwise, you're kind of breaking the rules. Next, soybean oil. We are still short. Now it's got a pretty big rally today, and I think we'll probably be taking profits, which are just great. We got short around 63.40. Here it is currently 51.90, 52 almost. So we're going to take 10 cents out of this, $10 out of this, something like that. More likely than not, give or take. Now, soybean meal had a sell signal on Thursday of last week that did not work. It was very quick, out the next day. Stops were hit, small losses. We do have a little bit of a failure up against resistance at today's high, which is a little bit above Friday. And we might see another sell signal if I can get below Friday's lows, which I doubt. But is it topping out? I think there's a decent chance that it is. I just want to keep my mouth shut for another couple of days to see how this develops. Next chart. The bottom of the market for corn so far on Friday, we caught with an ER buy signal. Great. It's rallying a little bit today. ER3 we didn't catch. That would be touching the green dot for the next few days. ER1 is always long when you see green. So we have a little profit, nothing to scream about. Let's see what happens next. I have to be bullish, at least to rally back up to resistance at 496-ish. Wheat. It's going to come along with corn a little bit, but it's not a long-term bull move. It's just a rally in a bear market. And that's what I'm expecting out of wheat, and then new lows, and pretty much the same commentary for corn. I'll go back and take a look at corn again. And yeah, same thing. As I've been saying, corn is going to go the way of wheat. But we do have a small short-term, well, not small, a short-term buy signal point blank. Next is live cattle. A buy signal we had a few days ago worked for a couple of days. There was profit potential. We're now definitely out because it's broken the old trailing stop, and that would have gone up definitely because of new highs and the way that the indicators that I use to move my stop move. It's just not an amount or a percentage. My trailing stop is based on a variety of technical factors. Next chart is hogs. We're still long from the bottom, and we're doing okay. Today's a little bit of a down day, nothing terrible. Still holding a great trade so far, and looking for this resistance area. I hope to get broken on a closing basis. That means about 74 and then higher. Could be this week. I think it's going to be this week. Next, we're short from the high day on orange juice. What a hell of a break. Excuse my Italian, French, and German. So I'm looking for lower levels, but we got oversold on Friday, and today we were still oversold. So I'm expecting a little bit more of a rally, which just might take us out of this trade. I kind of hope not, because I think the bear signal that we got at the top of the market, October 31st, may end up being a whopper long term. With this strategy, it's not a black box. We allow you to make some changes if you wish to the speed at which your trailing stop moves. So I could slow it down and stay with it, but then you're risking a larger percentage of your profit. I don't like that all that much. I'd rather just follow the system. Next, cocoa. Overbought, expecting it to turn down, waiting for would be great, another bearish engulfing, something like what happened on August 7th. Next chart, we're looking at coffee. Getting closer to overbought, not quite yet, but it blasted through resistance on Friday, and we get a good follow through today. So I'm not going to be surprised to see it in the ballpark of, what am I looking for here? 184 to maybe up to about 190. Next, sugar. In the process of making new highs and a new high close, I'd love to see this close above the previous high in order to maintain bullishness. I don't want it to turn into a bull trap, which means it goes up and makes a new high and then closes below the old highs, let alone closing lower on the day. That would not be good at all. Kind of point blank, a little bearish. Next chart. Cotton. New lows in support now. Tried bouncing off of it okay on Wednesday, Thursday, Friday last week and dropping into it now, but it's oversold. Don't go short down here. This is an area where I'm looking for reasons to be buying to get a little rally out of it again. And why not? It might even go back up to 89 again, but I'm not buying it yet. It's just oversold in support. Let's wait a little. E-mini. It's still pretty much hanging in there, but slipping ever so slowly. Spider's now down about a half a buck. DIA is only down around 20 cents, hardly a thing. And Qs are only down 40 cents. No big deal. Remember those gaps. I'm still looking for them to be closed. You have a great day. Mañana.